Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Hilliard MacBeth, author of the second edition of the book, When the Bubble Burst, Surviving the Canadian Real Estate Crash. He's also a portfolio manager and financial advisor in Edmonton. Welcome back to the show, Hilliard.
Nice to be with you.
Hilliard, the state of Canadian real estate, the stock market showed some pretty shaky legs last week. It's bounced back today, but real estate in Canada, I'm hearing bidding wars are still going on. A friend of the show, Steve Soretsky, saying last night they got something like 12 bids on a house, and the winner was $200K over asking. Is that typical?
Well, even in Calgary, last month, the statistics reported that the house prices were up something like 20% year over year, which is amazing, because Calgary and Edmonton have been the outliers up until now, where the prices are basically flat for the last decade or longer. But now we're starting to get some action in these cities too. And our economy in Alberta is not that great, so yeah, I mean, real estate is the number one hobby and the number one obsession of especially younger Canadians. And of course, older Canadians who've owned their homes for a long time are the prices have quadrupled over the last 20 years. So any older Canadian has done very well. But they feel that, the older Canadians feel that they have to help their children to get into the housing market. So they're offering, down payments, help, $100, $200, $300, even $500,000 of down payment help in Toronto. And that allows the younger people to bid, I guess, get into bidding wars. So, it's a completely, emotional market, because, if somebody saved up $200,000, I mean, imagine if you're young and you're making $100,000 a year and you have to save up $200,000 for a down payment and that wouldn't even be much more than a condo in Vancouver. It would take you forever to save up $200,000. I mean, $20,000 a year out of a $100,000 salary would be almost impossible to save, and that's 10 years of saving. You'd be 40 years old before you. So obviously they're getting help from somewhere, so when you get help, of course, some people, not all people, but some people would be more willing to get into bidding wars, because they don't feel they haven't felt the pain of sacrificing holidays and everything else for 10 years in order to come up with a down payment. It's a different mentality. And of course, underlying the whole thing, of course, the two things is, one is house prices. The belief is that house prices always go up, so you can't really go wrong by paying over ask, because house prices, even if you go too high, the house price will catch up to your overpayment, fairly quickly. And the second thing, thanks to our Bank of Canada Governor, Tiff Macklin, is I think it was about 6 months ago, roughly. He's a fairly new head of the central bank in Canada. Said, interest rates are going to stay low for a long time. I'm paraphrasing. It's not exactly the words he used, but that basically so you've got interest rates to stay low forever, so you don't have to worry about your payments, and house prices will always go up. So even if you make a mistake, it'll only be a mistake for a short period of time. So the combination of those things, basically, start your engines. We're off to the races.
I don't know. You seem to make fun of someone saving up until they're 40 before they buy a home. Well, guess what happened in my case? Because I live in the greater Vancouver area. It is, look, anybody can afford real estate if you get a car crash settlement, have your contract bought out, and have your parents chip in. See, the parents chipped in too.
Well, the thing is, I wasn't making fun of them. I was just saying, imagine if you were 28 years old and the idea of saving $20,000 a year for 10 years, first of all, would be so overwhelming. I don't know that anybody could handle it. But even if they could get their head around it, the sacrifices that are involved. What is the price of a house going to be 10 years from now? So they're doing all these sacrifices to get this down payment, but the house price is moving away from them anyway. So they're no further ahead. What would the house, the last 20 years, house prices have quadrupled in Vancouver. So it would be if it kept at the same pace, it would be at least a double in 10 years. So they'd be saving up $200,000 to buy a $2 million house. So they're much in that logic. And by the way, I don't agree with it, but in that logic, you'd be much better off to try and get the money somehow for the down payment from parents or even just go to the loan shark and borrow it and get in now before the price doubles in the next 10 years. And that's what we've created in Canada, is this incredible situation where people cannot get ahead by working hard at saving their money and being careful with their finances and sacrificing, not taking all the holidays that they want to and not splurging a whole bunch of money on a Tesla and all that stuff that used to be normal is out the window. Like nobody seems to, or the other thing is, let's just buy crypto and wait for the price to go up, and then we'll have enough money to buy a house.
Now, when you're running with high inflation like we are right now, shades of the 1970s, when in 1981, so just outside the 70s, the Canadian savings bond paid 21% and you were paying 18% on your house mortgage. Will that happen again to quell our current inflation?
So the interesting thing is a great topic, and one of the things is that I'm one of the few people still active in the investment advice world that was around at that time. My first job in 1978 was selling Canada savings bonds, which come out on November the 1st in those days, and they were a big deal back then, and it was 9.5%. And as you say, 3 years later, 1981, the rate had gone up to 21%. Now, it was only for that first year, and then it dropped down after that. But mortgage payments were probably, mortgage interest rates probably were 14, 15% at that time. And yet people still kept buying houses. So up until the crash hit, which was around 1981, even though interest rates were high, and remember, I said in 1978 it was 9.5% already, inflation was 10%, 12%, 14%. So people were thinking that it was still okay to buy a house. And then of course when basically the stock market crashed, the housing market crashed, a whole bunch of things happened. A bunch of big companies went bankrupt. The banks got into trouble. And so everything came down, and people that had speculated on the housing markets lost everything. And we pushed a big reset button, kind of like resetting your iPhone. But really, since then, it hasn't really happened in that way. So I don't know. There's no guarantee. If inflation goes up to 7 mil, the inflation number's coming out on Friday for the U.S. So the last number was around 6.2%. Comes out every month. The year-over-year number is forecast to be as high as 7%. And if people think house prices are going up at 10 or 12% a year, they might still keep buying, especially if the central banks don't raise the interest rates above the rate of inflation. So right now, we've got what's called a negative real interest rate, where your interest rate on your loan is 2 or 3%, but in Canada, inflation is 5%, and the U.S. inflation is 7%. So yeah, it's an incentive to borrow as much money as you can because the rates are too low in relation to inflation, assuming that you can find an asset that goes up at the rate of inflation or faster. And so the way that the central banks would stop that would be to raise interest rates above the rate of inflation, so that they would start to punish speculators and punters rather than reward them. And we aren't there yet, but that's what would be coming next.
We'll have more with Hilliard MacBeth right after this.
Don't miss out. Stay informed Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Hilliard MacBeth. Last week, the stock markets were in pretty shaky shape. Today, everything's very green on the boards, as they say. Oil up, gold up, the stock market's up. Was that all we needed, a little correction, and then it's going to be sunshine and happiness on the stock markets again for a long time?
Well, it's interesting because this whole buy the dip mentality, in the second edition of my book, When the Bubble Burst, Surviving the Canadian Real Estate Crash, I have a little piece in there about the start, what I think is the start of this buy the dip mentality. And it goes back quite a long ways. It goes back to 1987. The stock market dropped 20% in one day. It was October 19th, 1987. And one of the top assistants to Ronald Reagan called Alan Greenspan, who was a brand new chair of the Federal Reserve. He'd only been in the job for 4 months. And told him, Greenspan, it's your job to save us from this drop in the stock market. Now, the background to that is that the Federal Reserve was never designed to bail out speculators, right? The purpose of the Federal Reserve was to stop a run on the bank, and the whole idea, going back to 1913 when it was formed, was to be the stability for the banking system. But when Ronald Reagan's assistant phoned Alan Greenspan and found a willing participant in this thing, they bailed out Wall Street. And of course, what would have happened, we'll never know. But my guess is the 20% drop in the stock market was triggered by one of the very early computer-generated selling algorithms, 1987, and it would have fizzled out fairly quickly, and we would have been fine. The stock market wasn't particularly expensive at the time. There wasn't really any major issue with the economy or anything like that. So if they just left it alone, it would have run its course. But what happened was they stepped in, and the stock market went up, just like it's happening today. The stock market went up after a fairly big drop. And people started to learn the lesson that when there's a dip, what you do is you buy the dip. And they even have a name for it. It's sort of like the idea that the central banks have your back. After Alan Greenspan did that, they started calling it the Greenspan put. And, of course, central bankers noticed that Alan Greenspan got reappointed like 4 or 5 times. He was there for, I don't know, he was there until 2008. So whatever that is, it's almost 20 years.
It was a plunge protection team.
Yes. And the central bank's job is to make sure that you never lose money on the stock market. And of course, the Wall Street people loved it. And, of course, that just encouraged the Wall Street investment firms. Originally, it wasn't banks; it was investment firms like the various ones, Bear Stearns and Lehman Brothers. Now they got wiped out in 2008, but they weren't banks; they were investment firms. And of course, they're always going on borrowed money. And the problem is they don't have a lot of reserves to fall back on. So if the market drops 20%, they have to start selling, and that's what Ronald Reagan wanted Greenspan to take care of. He didn't want them to have to sell and destroy the stock market. So it's called the Greenspan put. It went on for 20 years. Then we had 2009, the global financial crisis. The government stepped in and bailed everybody out again, especially AIG, which really helped the Wall Street banks. And here we are, 12 years later, we're still operating on this idea that the government will always bail out the speculators, whether it's be in the housing market or in the stock market, it's the same. And so how do we get out of this situation? The only way to get out of it, because you can't talk to people and say, oh no, we're not going to do that anymore. Nobody would believe you, right? They have to step aside and let the markets drop, whether they be the housing market or the stock market. And then people would get the message and say, hey, the Federal Reserve and the Bank of Canada is not going to bail us out anymore. We're on our own. And then people would look at risk differently. And in my opinion, that's what we need to do. But my opinion is not particularly widespread. I think most of the people in the financial industry probably like the way it is. Keep the Greenspan put going. It's great.
Now, taking a look at the possible bankruptcy of SpaceX, which is Elon Musk's baby, and would that kill Tesla cars because he'd have to sell that off to cover his SpaceX losses? That's all out of the problems they're having developing the big engine to go to Mars.
Yeah, the engines to go to Mars are like, I don't even know. It's an order of magnitude or 2 orders of magnitude larger than the engines that they're using now on the launches. But most of their launches now in SpaceX are to put up these satellites. They're going to provide a Starlink, it's called, to provide an internet service for areas. It could compete with your cable and everything, but initially for people that are unable to access the other ways. And he's got to put up, I think each launch he does like 100 satellites or something like that, but he's got to put tens of thousands of satellites up there to make the thing really robust. So he's doing that, but he's working on this idea of going to Mars. And he really believes that if we don't take humans and expand them beyond Earth, if the Earth becomes too hot to live on, then humans will die out, and doesn't want that to happen. So he's making this big bet on this launch to Mars. And in the meantime, though, because the NASA in the U.S. was using Russians, believe it or not, NASA was using Russians to do their launches. He's actually got a pretty good business going there in SpaceX, where he's getting paid by the government to take people up and do whatever. And now he's got some competition with Jeff Bezos and some other people are trying to get in on that. But Elon Musk got quite a head start there as well. So yeah, he said that. Now I think what's happening is SpaceX is getting ready to do an initial public offering because it's a private company so far, and Elon Musk owns probably most of it. I don't know exactly the percentages, but there's been a bunch of fundraising rounds. So there is a lot of institutional money in there as well, and some big private shareholders. And so I don't know what the exact percentage will be, but he's going to need more money to get to Mars. So he's going to do he's obviously going to do probably go public with SpaceX, and that's what he's seeing. So he would have $300 billion. Or 200 or 300 billion in net worth in Tesla. Tesla shares have come down lately, so I hesitated there. It was, I think it was up to 300 billion at one point, but I think it's come down now 20% or something like that. But and then he'd also have another 100 billion or 50 billion in SpaceX value. So he's not just the richest man in the world, but he's also got 2 ventures going, not just one.
Now, of course, we have so many people saying, why would you want to go to Mars? Why do you want to mine asteroids? And I was just wondering, how many spin-offs have there been from the space program and the drive to get to the moon? Well, just in the last few years, there's something like 1,900 spin-offs from that technology. And the fact that you have a Christmas card that will sing to you, that has more computing capacity by several times than what they had on Apollo 13. But that's why computers got small. You had to fit them into a spacecraft. Those space blankets, the shiny ones they use after disasters, that was developed from the skirting for the moon landing vehicle. So, outer space, while it seems like it's an esoteric development and all theory, it has a lot of practical applications here now. And the fact that you have GPS on your phone so you don't get lost while driving to your new doctor's office, that's because of outer space.
Well, just to use a more prosaic example, is the Second World War. They needed electromagnetic surveys out of airplanes to find the submarines, because they couldn't find them any other way. So they flew these planes over the Atlantic to try and find out where the submarines were, the enemy submarines. And that was the start of geomagnetic surveying of looking for mineral deposits in northern Canada. And that was a huge innovation. There were so many new projects developed, and that came straight out of the necessity during the war to do that. So now it's hard to get the same kind of urgency developed about going to Mars. Obviously, Elon Musk feels it's important, but I think if you surveyed 100 people, you wouldn't find even one that felt it was particularly urgent to go to Mars. So war is one thing, but a vision like that, there may be people that say, "Why are we spending all that money to go to Mars? There's no reason to go to Mars." So.
Well, we have enough nukes on this planet to wipe us out 1,500, 2,000 times over. Maybe Mars isn't a bad place.
Yeah, that's actually he mentioned that. I mentioned the one reason, which was the planet getting too hot to live on, but the other one was the extinction event that he mentioned was related to another war, which would be wiping out the human race on planet Earth. So we need to have an outpost that we can go to. But do you know the first people that go to Mars, they don't get to come back, right?
Well, it depends who's sending you. Is NASA plans to bring the people back, and I think, but there are Mars missions where, you're just going to be a permanent colonist.
Well, but as somebody said, well, I'm going to die. I'm going to die eventually anyway, so I guess I could die on Mars or I could die on Earth. But it's kind of an odd feeling to say goodbye and head off to Mars and know you're never coming back.
I don't know how many of the earlier explorers would have left if they knew I'm not coming back.
Yeah, exactly. I think it's there is an urge, though. There is definitely an urge among people to explore, and I don't think it'll ever go away.
I don't know if our mums were in charge of the world. I could imagine, Gurf, you're not going over that hill. We don't know what's over that hill. You just stay here in the cave. But I know as a little kid, my mom was always telling me to stay close to home, and once I got a bicycle, I could be 20 miles away in an hour or so. So, what your mom asks you to do because it's the safest thing to do, I don't think kids do. And teenage boys especially not.
Yeah, well, you get to the point where you say, why don't you just go and, explore the world? I can't stand having you around anymore. So there's that too.
Yeah, there's always that, upwards, onwards. Now, Canadian oil, and oil in general has come back. Alberta's, deficit went from something like $18 billion to just under $6 billion. Do we expect oil to stay healthy?
I don't, but I think I'm in the minority again on this one. I think that people are convinced that oil is pretty strong. But, one of the things that doesn't get mentioned very often, but is true, is that there was a surge in the price of oil before every recession in the last 20 or 30 years. So it's quite normal. We had a huge surge up to $140 a barrel just before the global financial crisis, for example. So I think the people might see it as a signal of the wrong thing. What it often does is tells us that there's a slowdown in the economy coming in. I'm not quite sure why it happens, but it has happened in every single case. And then, of course, longer term, you've got the other thing about switching from gasoline and diesel cars to electric. And there's various arguments as to whether it's going to happen in 10 years or 20 years or 30 years, but it's probably going to happen. And a lot of people are thinking it's going to be pretty significant by as soon as 2030. Well, that's only 8 years away now. And about half of the oil burned in the U.S. goes to cars and light trucks. So that's roughly 9 million barrels a day. There's total is 18 million in the U.S. One of the heaviest users of oil is the United States of America. So if 9 million barrels gets removed over the next 8 or 10 years from the consumption in the U.S., there's no way the price of oil is going to stay up at $100 a barrel or whatever. It's not even that high right now, but $100 a barrel will seem very remote. We're looking more at much, much lower prices if the majority of the people switch to electric cars.
In the meantime, we have a lot of people calling for an end to oil and gas exploration. Have they thought about what our highways are made out of? In Canada, it's exclusively asphalt. In the U.S., they use concrete. But we have a cement and rebar shortage right now. How are you going to make roads out of cement and concrete?
We had an experimental freeway built in with concrete cement behind our house when we lived on the outskirts of Edmonton, and it is so noisy. The noise of the concrete and the tires of the cars, it's so loud that we moved for various reasons, but that was one of the reasons we moved, was we couldn't stand the sound. Now, I don't know if that was a particular design of that particular highway or not, but it was pretty unbearable.
It's the expansion joints, right? When you're driving on a U.S. freeway, your tires are going thump to the thump, thump to the thump.
Well, no, it's not just that. There's that, but on top of that, in order to, I guess they have to put grooves in the.
Yes.
This really high-pitched whine that even in between the expansion joints, the high-pitched whine is of the tires and the surface is pretty loud, and I couldn't believe it. So I checked. We were a kilometer away from the closest part of the freeway, and yet we could hear it like it was right in our backyard. So it was pretty ridiculous. And so yeah, I think it'll stay asphalt in Canada, partly because of the cost of repairing. But there'll always be lots of oil. I mean, there's lots of oil in the world. There's no, I don't think people should get too worried about a shortage of oil. The Saudis and the Russians can put it out for very low prices. And what is a worry, though, is some of the higher costs, like the offshore Gulf of Mexico, the fracking in Texas. The shale is expensive. It's up around $40, $50 a barrel. And, of course, in Canada, the oil sands is expensive as well. So they're bringing the cost down, but they're never going to get them that low. And so if the demand disappears because of switch away from gasoline to electric, the high-cost suppliers will get hit the hardest.
Friend of the show, Joseph Schachter, also pointed out, while in North America and Europe, we're keen on electric cars, in Asia and Africa, in several countries, most of them, they're just developing their economies now, and electric cars are way out of reach for them. Their grid could no way support electric vehicles, not that ours could right now. And there's just saying the most affordable thing for them to run stuff on is diesel and gasoline, and they'll stick with that.
Yeah, I think the shortage of electricity, if all the cars converted to electric, would be a challenge. But I think it's a challenge that would be quite easily met if people got thinking about how to meet the challenge. I think people that are supporting the oil and gas industry are using that as a reason to not do it. But I don't think it would be a big problem to find a way to do it. For one thing, the energy used in an automobile is quite a bit less in an electric car versus a gasoline car, just because electric doesn't waste as much energy as a gasoline. About 70% of the energy goes into the gasoline car is wasted in heat that's produced by the car going down, and whereas the electric car manages to lose only about 30% of the energy. So there's quite an improvement there in the total amount of energy that's consumed. So it would be quite easy, actually, I think, to provide enough electricity if that's what people wanted to do.
I know when I was driving a hybrid vehicle, I would try to find the least sloped way to get to a location and then think of all the steep hills on the way back I could use to charge up the battery.
Yeah, those batteries in the hybrids, unfortunately, are too small to make much of a difference. I saw this ad on TV, the Hyundai. They said, "Oh, we don't need gas anymore." So I looked it up, and the battery in that car only has a 30-mile range. So there's no way that you can't run that car without gasoline, and so it's a very misleading ad, and it was quite irksome. But yeah, maybe they'll fool a few people into believing that. But no, the battery needs to be a lot bigger than they have in the hybrids. And of course, why bother with all of the gasoline drivetrain? That's one of the great advantages of electric is you get rid of all that, and it's much simpler operation. Maintenance is almost zero. And but with a hybrid, you still got to maintain that gasoline because most of the time a hybrid runs on gasoline; it doesn't run on electric.
Hilliard, thank you so much for chatting with us.
Thank you for inviting me on your show, Jim.
My guest has been Hilliard MacBeth, author of the second edition of the book, When the Bubble Burst, Surviving the Canadian Real Estate Crash. If you have any questions for Hilliard or any of our other guests, you can send them to info@housestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HouseStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HouseStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HouseStreet.com radio is a production of House Street Media Incorporated.